Local markets took another dive today after a raft of disappointing data from around the globe. The latest is a weak inflation reading from China, prompting officials to pledge a more concerted effort to fine-tune its economy. However, attention will turn back to Europe tonight, with both Greece and Spain once again foremost among investor concerns. Neil Woolrich reports.
The only bulls in Spain at the moment seem to be in Pamplona. The markets are instead being overrun by bears and its investors who are at risk of being stampeded. Spain's 10-year bond yield again briefly spiked above 7% on Friday after last week's meeting of the European Central Bank delivered less than investors had hoped.
I think markets were a little bit disappointed that the European Central Bank only cut interest rates, which is a good thing. But I think they were looking for a little bit more, maybe the securities market program being started up again.
The Spanish government is promising more reform and to do whatever it takes to avoid further economic crisis. But markets remain unconvinced, especially after a meeting of European finance ministers on the weekend failed to deliver a definitive bank bailout mechanism.
This is going to be a long drawn-out process. And I think markets are perhaps a little bit suspicious or worried there may be some backsliding.
Closer to home, concerns are mounting about China, where inflation is now running at a disappointingly weak 2.2% for the year.
Over the weekend we had the Premier as well calling policymakers over there to put the foot on the gas again, try and get the economy going over there. But at the same time, and this is quite important, not to get house prices rising over there as well.
And in the US, the election campaign might be heating up, but the economy most definitely is not. Data released on Friday shows just 80,000 jobs were created in June, well below market expectations and keeping the unemployment rate stuck at 8.2%.
The US economic recovery remains tepid, and downside risks have intensified. Continued policy action is needed to boost the recovery.
Christine Lagarde says the IMF will be downgrading its global growth forecasts when it releases its next outlook statement later this month. But for now, attention turns back to Greece, where the newly minted government has just survived a confidence vote. Its finance minister is about to meet with officials from the EU and IMF to thrash out the finer details of Greece's bailout agreement and keep its economy from sliding into the abyss.